Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Wednesday, January 14th. A little bit of a ho-hum day in the grain markets. You could potentially look for some silver linings there. And then over on the livestock side of things, a pullback. So a little bit of a role reversal in terms of price action in grain and livestock markets midweek. Outside markets, silver just continuing to rip roar higher, up about $7 today. That's another 8%. It seems like that market can't be stopped. The CME group is coming out with a smaller contract, so that's going to be exciting. That'll be, I believe, on February 9th. That's the 100-ounce contract. Previously, it's just been the 5,000 ounce and 1,000 ounce. With the contract size, the notional value of it so much larger at these price levels, the daily swings and intraday fluctuations are pretty tough to manage for most retail traders. So I think the new contracts will be great. If you have any interest in trading that, don't hesitate to reach out to our trade desk to learn more about that. In other outside markets, crude oil kind of broke out above the top end of the range. We'll start there. We've got this chart pulled up here. We were breaking out, getting above that 61.50, which we outlined in Monday's commentary. Unfortunately, we got a headline drop from the president with regards to tensions in Iran maybe cooling and things subsiding there. So we saw basically the market erase not only all of today's gains, but most of yesterday's gains in the matter of just a couple of minutes. So a little bit of a setback there, but all in all, a good trend still in the making. Higher lows and higher highs over the last week or so. So constructive. But what we want to see for another leg higher is consecutive closes out above 61 and a half. Above there, you might get some follow through momentum. If you're a believer in the commodity super cycle talk, you look at precious metals and industrial metals staging impressive performance rallies. The next shoe to drop theoretically would be the energy complex, with crude oil obviously being front and center. So potentially a little bit going on that front. Now we'll jump over to the grains and livestock. March corn futures obviously got walloped on Monday on the back of that uniformly bearish USDA report. Typically you can find a sliver of good news somewhere. Unfortunately, there was none. Saw a little bit of follow through downside yesterday and today, just kind of recouping yesterday's losses, which I guess is constructive to some extent, but all in all, still a lot of damage on the chart and a lot of work to be done for the bull camp. What is going to be the catalyst to get us back into where we were basically consolidating for several months in the 440, 450 area? It'd probably take a pretty serious weather event to do so, and right now it doesn't seem like that's really at the forefront. That's not to say we can't get a relief rally. If you're a sentiment trader looking at the sentiment of majority of the people out there, people are about as bearish as they've been in a long time. So potentially that's enough to spur a counter trend rally, but not something that I would go hanging my hat on. One thing we've been looking at is that March and Dece spread. Bullish the March, bearish the Dece. That spread today, I think it was 25 cents at the close. It was as wide as about 30 cents earlier in the week. So that would be something that we would look at potentially working with clients in as a way to play the corn market here in the near term. Again, technically speaking, a lot of work to be done. Need to get out above 425, 426. These were these old lows from October. If you can do that, potentially you retrace the breakdown point. 435, 436, but getting out above there with some conviction, again, going to take a serious fundamental catalyst. On the downside, if we take out yesterday's lows, 417, you're looking at these lows from the August WASDE report that comes in near 410. Important to note, this low on August 12th, that was on the back of a bearish report from the USDA. So the market can bottom on bearish news. We still have yet to see if that'll be the case this time around or not. Now jumping over to the soybean market, chart technically not good at all. Closing below this old trend line support level, rounded out here and then closing near the lows. We've stabilized today, but all in all, you want to see more of a relief rally on the back of such heavy selling, and the fact that you're not able to get much of a pop is a little bit concerning. If you just look at this trend line, we're well below that. There is a little bit of support down here in the 1030, so that's going to be the area that I think is going to be really key to keep an eye on as we enter into the end of the week. That's going to be 430, 433, break and close below there, and you're looking at potential $10 in the making. So that's going to be a must-hold line in the sand for us going forward. Over on the wheat side of things, wheat, believe it or not, probably the most technically constructive. Again, if you're just looking at the technicals and kind of tuning out the fundamental noise, this chart certainly looks the best. We're trying to carve out a low and holding it pretty darn well even throughout the week, especially with the pressure that we saw on Monday. We were up knocking on the door of a breakout, obviously rejected that, but all in all, we weren't able to make new lows for the move, and we've rejected lower prices at these low ends at 505, 506 over the last 3 sessions, so that's encouraging. But again, wheat is one of those markets. We've been talking about it in our daily commentary. I think it's probably going to be something that you want to look at as a potential market to buy on strength and not necessarily try to bottom pick down here. Because if we do take out $5, that opens the door, and there's really no technical support below that, and momentum could kind of feed on itself. Options could be a potential way to play this market if you want limited risk to the upside. If you've got questions about different option strategies in that market, don't hesitate to reach out to our trade desk. Always ready, willing, and able to help. And then quickly jump over to Livestock. February live cattle just gave back yesterday's gains, a little bit more chewed into Monday's gains as well, but all in all, not a lot of technical damage. It looks like for now we're carving out a little bit of a new higher range, 237, 238, and the low end of that range is going to be here where we broke out from on January 2nd, so that's going to be 232, 233, give or take. A breakout above or below potentially it leads to some additional movement in that corresponding direction. Feeder cattle, similar type of setup. Little pullback today, but all in all, didn't do a whole lot of technical damage. Still in a pretty good uptrend on that front. And then lean hogs, one of the markets we've been probably more optimistic on over the last several months, held really well earlier in the week. Then today, another breakout move to the upside, new highs for the move, the highest prices since September. So certainly encouraging there. Now just a stone's throw away from those old highs at the end of September near 94, 95. So that would be the upside target if we can keep this momentum going. Break and close back below the support pocket 90 and a half. That would probably neutralize our bias. But for now, the trend is your friend, and that is up and to the right. So that's what we're looking at. If you've got any questions at all, don't hesitate to reach out to our trade desk. Again, trading futures and options does involve substantial risk of loss and is not suitable for all investors.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.